Hello, my name is Faisal Khan. I'm a banking and a payment consultant. As you know, we are in very uncertain times and there's an economic slowdown. And people keep talking about an economic slowdown. Does this mean that value is being eroded from society? Is money somehow being deleted? Is money somehow being erased? And what does this economic slowdown mean? Well, it's got something to do with something called velocity of money. So let's say the total money supply in any given country is, X. In this case, I'll just use this example of a 200 Turkish lira note. I didn't have a 100 lira note, so I had the 200, and I'll use this as an example. So in this case, the economic value, the total money supply in this, let's say, hypothetical country is only 200. And the GDP, if I'm the only one in this country who is working and I'm the only one who's producing a goods or service, and 200 is exchanged in once, and given to me for the products and services that I produce, then that is a GDP of 200. And the velocity would be GDP divided by the money supply. 200 divided by 200 is equal to 1, so velocity is 1. When you trade amongst multiple parties, the money supply really doesn't increase. What you're doing is you're exchanging money more often. I will buy shoes. The shoe guys will buy some raw material. The raw material guy will buy some groceries for his family. The grocer will pay for his electricity bill. The electricity company will pay for, I don't know, gasoline or something else, oil for this thing. The oil company will probably pay to shipping companies and so forth. You see, it's the same 200 that is traveling, and the more hands it exchanges, the higher the velocity of money. So for example, if this were to exchange 10 times, and 10 times would mean 200 times 10 is 2000. So then the velocity becomes, 10. And the GDP, well, it's the money supply, which is 200, times 10 is 2000. So the GDP is 2000. And if you divide 2000 by the money supply, which is 200, you get 10, the velocity of money. So the velocity of money is a really great indicator of how much transaction is happening in an economic zone and so forth. Right now in these Corona times and in the COVID-19 times, the overall economic activity will slow down. That means people will less likely be able to spend money. They will not be exchanging. They'll say, you know what, no, I'm going to hold on to my money. So the velocity of money will go down. When a velocity of money goes down, that means money supply is constant, so GDP will go down. And that is what will bring down the gross domestic product of products and services being rendered. And right now, for example, the transportation GDP has gone down. The services sector GDP has gone down. The hotels and entertainment and tourism and travel sector GDP has gone down. So that brings down the overall GDP. Why? Because the velocity of money is what is slowing down. I hope you're able to understand why velocity of money is important and how it contributes towards the GDP and the overall money supply. If you have any questions or comments, there's a contact form in the description below. Please fill it out and I'll be happy to exchange notes with you. Till next time, Faisal Khan signing off.